Okay, what is up, Stock Compounder Nation? We are live. There's 22 of you here. That is fantastic. Big shout out to everyone who's here. Let us know where you're tuning in from. I like to do this to start these live streams. Fun to see where people are. Obviously, the big news just yesterday, Charlie Munger, Daily Journal, loads up on Alibaba yet again. Okay, I think it was like an 86% increase in number of shares held for Daily Journal. We obviously have already seen some pretty big YouTubers in the value investing community come out with that news, that big move from Daily Journal yesterday. So what I like to do when I see that a great investor has added to a position is what was the likely price that they bought in at, okay? And I give them a lot of credit. You know, they're incredible investors. I just assume that they buy at the bottom of the quarter where that addition took place. So if we look at that, I'm looking in ticker terminal here. It's funny, the low right now for Alibaba is basically today, okay? So there was no time in the third quarter when Charlie Munger added to Alibaba when the price was lower than it is now. I think the lowest was like 145 on September 24th. Okay, so just like 2 weeks ago, at 145. Now it's 143. Okay, I actually added, I think it was, time is tough. I've been on vacation for a little over a week. I added around 144. So, must have gotten a better price than Charlie Munger did, which feels good. It also feels good, there's been a lot of fear in the markets around Alibaba, right? About what the CCP is doing around regulation. A lot of fear, a lot of investors fleeing China. And so it's comforting to see an incredible investor like Charlie Munger doubling down on Alibaba. Charlie has spoken very highly of what China has been able to do as an economy over the last 30 some years. So clearly he's very bullish on China already, but still a positive sign to see him doubling down on Alibaba. A number of you have also pointed out, Charlie hasn't done very well investing in companies in China. If you look at his track record of investing in China, it's not that great. I haven't dug into that personally, so I can't speak to that. But that would be worthwhile to look into. And as I say that, I recall how great of a track record Warren Buffett has had, particularly in the banking sector. Okay, if you look at retail, Buffett hasn't done very well. If you look at airlines, not a great track record there. I don't know that anyone has a great track record in airlines. But if you look at banks, Buffett is batting like 100% when it comes to banks. So I think it's worthwhile to look at, particular geography or industry. What is an investor's track record in that specifically? So maybe I will do a video on that, looking at, what has Munger invested in China and how have those investments panned out? Obviously, he's very close to Li Lu, who's, perhaps the best investor in China, based on 20 plus year track record. But it's hard to know how much Munger and Li Lu have been talking about this particular investment in Alibaba. Obviously, Li Lu left that investment a couple of years ago. We don't know if he's in Alibaba. He may be through the Hong Kong exchange. He's not currently through the ADR or the VIE through the New York Stock Exchange. So we just don't know what's happening with Li Lu. But let's jump into the comments real quick here. Go Baba. Yes, I was happy to see Munger doubling down because I have a very large position in Alibaba. It's like 20% of my portfolio, and just added some a couple weeks ago. So it's reassuring to see that Munger is still bullish on Alibaba. And it makes sense. I wouldn't expect anything different, right? Munger doesn't look at price action to guide, his investment decisions. So the fact that so many investors are fleeing China, that there's a lot of fear. Fear tends to build on itself. I think that's what we're seeing. Hasn't changed the thesis for Charlie Munger, at least. That's what it seems based on his recent actions around Alibaba. We've got Headphone James, tempted to do it too. Yes, tempted to double down on Alibaba. I was more than tempted. I put another stake down recently. Could be a great opportunity. Obviously, it's scary, right? It's scary when you see everyone else running the other direction. In a company like Baba, it's scary to go the other way, right? To be a contrarian, because you're not going to be comforted by the actions of others, right? If you're acting contrary to that. But that tends to be where the big bucks are made in investing, doing the opposite of what the herd is doing. Obviously, that's not always the case. You can't just be a contrarian to do well in investing. You have to be a contrarian and you have to be right, okay? And that overlap, those two things together, is very difficult to achieve. Okay. There's often a reason why, the masses are heading in one direction. So you have to not only be contrarian, you have to be right. David Park, that conviction. Yep. A lot of conviction there for Munger, it seems. I bought some more too today. Azim, awesome. You're buying it at a low. I was looking at when the price has been as low as it was today. And you got to go back, I guess you've got to go back almost 2.5 years to July of 2019, 2.25 years, when Baba was lower than it was today. So, and the business, if you look at the business results, the business is a lot stronger today than it was 2.25 years ago, in terms of growth and revenues and what the potential upside is for Alibaba. So at least that's my opinion looking at it. None of this is financial advice, but that's how I'm seeing it. Prattman, I keep DCAing, right? Dollar cost averaging. So as it drops, it's not a terrible strategy. It's probably a good strategy to have a set amount you put into it. Maybe each 10% that the stock falls, something like that. That's something Phil Town has talked about in the past as a strategy for buying in as the price goes down, right? If you put the same amount in as the price drops, you're able to buy a bigger and bigger chunk of the business. And, Alibaba is buying back stock, right? They have a buyback program that's currently going. So for us current shareholders, we get a bigger and bigger piece of the pie just as Alibaba buys back stock, retires shares with the cash on its balance sheet. So that's great for us as well. Have you added to your 20% position? I added a little bit. My buy like 2 weeks ago at somewhere around $145 per share wasn't in my primary investment account. It was in my son's UTMA account, which is basically a tax advantage account for, if you have children, you can contribute to their tax advantaged accounts. And it's better than just doing a taxable account in terms of being able to compound with less of a tax hit over time. So recommend for any of you who had kids, you want to get them started early with their investment portfolios, check out UTMA, UGMA accounts. Big fan of those. Monish Pabrai, that's what he used. I think maybe still uses. I don't know if his kids have probably taken those over by now. I think in most states it's 21 years old when those accounts get transferred to the kids. In some states it's 25 years old. So you just have to understand how it operates in your state. Irish Media, do you have any idea how to buy racists from Germany? No, I've gotten this question a lot. I should actually make a video about this exact thing. For people who live in Europe, how do I buy Races? I keep referring you guys to Enrico on Twitter. Enrico, I don't remember I should figure out his last name because I've said this in a few videos. Enrico, just look through who I follow on Twitter. And it should be fairly recently. So it should be near the top of the list, Enrico. I'm pretty sure he's in Europe and he's bought Races, maybe through DJCO. I don't think you can do that now. I think DJCO withdrew access to Turkey because of the recent inflation situation there. But I'm sure there's a way, guys. There's always a way. It's just a matter of turning over enough stones to find, the path to own a particular company in whatever market you really want to own something. The great thing is the harder it is to find that out, to figure that out, the less competition you're going to have, right? So I'd say put in that extra effort, put in that extra mile to figure out how to do that. Again, not investment advice around Races. I do own Races. I bought it through Fidelity. Can't do it on their online platform. Had to call the International Trade Desk in order to buy Races through Fidelity. So a couple hoops to jump through. Nothing too bad. I thought it was going to be a lot more work than it was, but keep trying to figure it out. 148 was buying price of Charlie. I think read it somewhere. So yeah, let me just pull up Dataroma real quick. I don't think Charlie has disclosed what his buy price was. So a lot of people get this confused. If you go to Dataroma and just click on Charlie Munger, it says 148 as the reported price for Alibaba. Now what that is, that's simply the closing price of Alibaba on the last day of the quarter. Okay, so that tells us nothing about what price Charlie Munger and Daily Journal actually paid for Alibaba. All it tells us is what was the price at the close of the last day of the quarter. So don't be misled by that. It is a little bit confusing. Let me just double check that. So I'm in ticker now. I'm looking at the price on September 30th. Yep, 148.05, which lines up exactly with the reported price in Dataroma. It shouldn't say reported price, okay? Because that's confusing. That implies that the fund manager, declared that was the price that they bought it. It's not a reported price. Nobody reported it. It's simply the price at the end of the quarter. So what is the size of BABA in your portfolio right now? I think it's around 20%. It's probably a little less because of how much it's gone down. I think it's gone down like 35-40% since I originally bought it, around $227 per share. And it's pretty easy math, guys. If you just take 144, which is the current price, 144 divided by 227. So it's down 37% since I originally pulled the trigger on Alibaba. So, it's significant, right? 37% drop in one business that you have a pretty big bet on impacts the portfolio, okay? But that's really just short-term impact. That's nothing I care about. That's just volatility in the short term. But a lot of investors, or speculators even more so, really pay attention to that. What is the stock price doing in the short term? I try to ignore that as much as possible. If a company I own is dropping in price, and nothing has changed in the investment thesis for me, I like to just tuck it away, okay? I really haven't been watching the BABA price over the last 6 months, other than you guys kind of reaching out saying, hey, what's happening with BABA? I'm starting to get really uncomfortable. I don't watch it, okay? If I have a 5-year thesis on a business like Alibaba, especially in an environment like this where fears are running rampant, investors are pulling out, it doesn't do me any good to watch what it's doing price-wise on a daily basis. That's just going to, kind of encourage me to make emotional decisions, right? And join the herd in terms of having that fear spiraling and running out the exit. So I'm not interested in that. BABA, New York Stock Exchange. Yep. BABA, these super investors seem to be buying through the New York Stock Exchange as opposed to buying directly through Hong Kong. 30% here, says Marco, and we'll keep adding. Yep, 30% is more conviction than I'm comfortable with, especially for a company outside of the U.S. But we all have to make up our own decisions about how big is too big. 30%. Does anyone know how much cash is in Daily Journal portfolio? From Charlie Munger. I don't know that off the top of my head. I could pull it up real quick in Ticker just to see what it says there. So Daily Journal DJCO. Go to financials. Go into the balance sheet. So we've got cash and short-term investments, 359 million. Okay, 359 million. I scroll down. Net debt. So that's just cash minus the debt, 325 million. Okay, so net debt negative 325 million. So the net cash is 325 million, which is a very strong position to be in for Daily Journal. The market cap is 444 million. Okay, so 325 million in cash, a market cap of 444 million. So then you just got to look at the investment portfolio, which if you go to Track Investing Gurus in Ticker, you can just click Daily Journal or type Daily Journal. And you can see the Daily Journal investment portfolio, which I'll just run a number real quick. The way to add it up quickly, in Daily Journal, it doesn't give you a total for the investment portfolio, but you can take the top one, which is Bank of America, 97.6 million, and divide that by this holding as a percent of the firm's portfolio. So 97.6 divided by 0.4581, and it's about 213 million, okay, for the Daily Journal investments. Now, BYD is not listed in Ticker for the Daily Journal investment portfolio. So it's worth doing a little bit of digging to try to estimate how much BYD Daily Journal owns, because I'm pretty sure that might be the most significant stake, even higher than Bank of America. So you've got a very impressive investment portfolio and cash position for Daily Journal compared to the market cap. So it could be an interesting one to look at, guys. Daily Journal. What else? What else do I have here? Jack, what do you think about ByteDance getting into the e-commerce space? I don't have any opinion about ByteDance. Pretty sure ByteDance owns TikTok. Let me know if that's right, guys, in the chat. It's not something I've looked into. Proper hands have almost left BABA now. Patience is key. Sorry, paper hands. So this is a reference to the whole meme stock thing with, what was that? What's Reddit? Paper hands, right? The price action shifts. People are out of here. That's what paper hands are. At least that's my understanding of it. So this person thinks anyone who doesn't have the diamond hands, the high conviction in Alibaba has already left, which, could be bullish, right? If that's actually true, bullish for the short-term price action of Alibaba, which again, I don't really pay attention to. Listening from Switzerland. All right, Jose, nice to have you here from Switzerland. Can we expect Munger must have talked to Jack Ma before investing? Jack Ma must have loved to meet goats, right? Greatest of all time, like Charlie Munger. I don't know. I've never heard Charlie talk about having a meeting with Jack Ma. And, I kind of doubt it based on what Charlie Munger has said about Jack Ma. I think in that 1 hour special that Charlie Munger and Warren Buffett put on, didn't have great things to say about Jack Ma. Charlie Munger sees Jack Ma as, what was the term he used? A player? That might have been the term. But it seemed like Charlie Munger doesn't think Jack Ma was particularly good for Alibaba. So I think he's happy to see Jack Ma kind of stepping back, at least in terms of having an active role in, carving out the future for Alibaba. That's my impression. Obviously, I don't have too much to go on from that. Baba already 20% on my portfolio, thinking about adding some more. Hey, if you guys are bearish on Baba, please chime in. I know creating content around Alibaba, it's easy for us to get into this, bullish circle where everybody's just talking about how great Alibaba is, and there's no room for people coming in with constructive criticism about Alibaba. So chime in, please, in the chat. Let's balance this thing out a little bit. I'm at 20% as well, but out of cash to buy more. Yeah, it's tough. It's tough, especially for me, right? When I went into Baba, I put a full bet on Alibaba. And so as it dropped, I didn't have the gunpowder to keep adding. But that's the approach I chose. Now, it would have worked out very well for me if the price had started running up, right, on Alibaba. And that happens with investments as well. It happened with Micron. So you win some, you lose some. I think it's a wash over time if you decide to take a full position at once versus kind of slowly buying in. For me, it's, you win some, you lose some. And at the end of the day, it doesn't matter that much. So in the case of Baba, it didn't work out great for me, but that's just how it goes. Greetings from Iceland. All right, Kristen, great to have you here. Kristen Magnuson, fantastic last name from Iceland. I'm sure it's quite common. Why can't the stock go to 100? QE00, I think, asked that. Well, the stock can go to 100, right? There's no laws in the realm of the stock market about how low something can or can't go. So Baba could go to 100. It could go to 50, right? I'm sure there are limits. I don't know really how to construct a very rational argument about what those lower limits might be. I think that gets into the realm of technical analysis when you're looking at charts and you're looking at support at certain levels and all of that. I don't know anything about that. That's not the game I'm playing. Not saying it can't work, right? I'm sure there are some great investors who use both fundamental analysis and technical analysis, kind of price action of the stock over time. That's just not a realm that I know anything about. But from my vantage point, the stock could easily go down to 100, right? It could keep falling. But the question to you, QE, at the end of the day is, why does it matter if the stock keeps going down to 100, right? If you have conviction about where this business is going to be in 5 or 10 years, so what? It doesn't matter what happens in the short term to the stock price, okay? The only way the stock price matters in the short term is if you don't have a high enough conviction in what the business is worth that you let the stock price action influence your buy and sell decisions. And that's a very vulnerable position to be in, right? As an investor, to be swung around by the market volatility in terms of your own decision making. And that's very core to The Intelligent Investor, right? The book that Benjamin Graham wrote, one of Buffett's all-time favorite books on investing, The Intelligent Investor, is that you've got Mr. Market here, who's this manic depressive character, right? The collective buy and sell decisions of everyone who makes up the market. If you're making decisions based on what the collective of the market is doing, you're out at sea without a compass, right? You're completely at the whim of the waves of the ocean. And it's a scary position to be in. And I do not recommend it. I think investors who are in that position out to sea without a compass, without an anchor, you're going to get beat up over time. It's very unlikely that you will do as well as the market. So if you're in that position, you should probably just say, all right, I'm just going to join the market. I'm going to index, and I'm going to do it consistently every month or every couple of months. Take the emotion out of the equation. That's why most passive investors outperform active investors, right? Because it's very difficult to take that emotion out of the equation, to take the emotion out of your investment decisions. So if you can do that by being passive, by automatically investing, you're going to outperform the vast majority of investors. And even most people who try to do it passively underperform, right? Because they put more in when the market is hot. They take more, they don't put as much in, or they even take money out when the market is crashing, okay? It's very difficult, even if you think you're passive, to run counter to those actions of the market. What else? Why are you comfortable with 5 times 20 bets when Pabrai has 10% bets? In his personal portfolio, he has less, but you are not as good as Pabrai. That is true. And very direct, Michael. Thank you. No offense. Okay, he said no offense. Why am I comfortable with 5 bets at 20%? Well, Pabrai really makes 10% bets because he's managing other people's money. Okay, and that's a whole different animal than managing your own money, because you've got to deal with other people's emotions, right? OPE, when you're dealing with other people's money, even if you've culled very well who you're partnering with, right? Who the investors are that you're managing money for. Pabrai has done a very good job of weeding out the people who are highly emotional when stock prices swing by a lot in the short term. But still, you're going to have to manage other people's emotions as part of the job of being a fund manager, managing OPM. So for me, 10% bets, it's just not, it's not enough. Okay. I don't want to have to find 10 positions that I'm really excited to own, 10 businesses that I'm really excited to own. I think it's more feasible for me to find 5 businesses that I'm really excited to own. And I want to have more of a position, right? I want to have more weighting in those 5 companies that I really like. So, part of it is laziness, perhaps, only wanting to have 5 big positions rather than 10. Part of it is I don't have to deal with other people's emotions, right? So I can be more concentrated with my own portfolio. I don't want to have 1 to 3 positions like Pabrai does in his personal account. That's too much. I know he's better than I am, right? He's a lot better than I am as an investor. So, I want to back off from that a little bit. And 5 just feels comfortable to me. Obviously, we each have to find our own comfort zone in terms of how concentrated we are in our investments. I still remember when you had 220 target in your watch list. Yeah. And a lot of people had a belief it can never come to that level. I remember this very clearly. So I don't know how long ago it was. I have 2 kids, very young. I have no sleep. Time is completely distorted. But it was sometime last fall, I think. I had Alibaba on my watch list at a 220 buy price. And I think it was around 260, 270 at that time. And I got all these comments saying, Baba is never going to go down to 220. Okay. You should just buy it now. Obviously, it's a great business. And, I thought to myself, well, that's fine. If Alibaba never comes down to 220, I don't need to own Alibaba. Okay. That's a pitch I can let go. It's not a fat pitch until it gets down to 220. right? That's when it becomes attractive to me. And a big part of that was based on where Ray Dalio was adding, where David Tepper was adding, right? There were a lot of great investors who were already pretty heavily exposed to Alibaba before Charlie Munger, before Monish Pabrai bought in. So that's kind of what I was using as an attractive buy price. And yeah, people say, well, it's never going to get there, right? When things are going well, when companies are doing well, when the stock price is appreciating, things are looking rosy, it's easy for people to convince themselves, all right, this thing is never going to come down, okay? And there's FOMO that comes into play, right? I need to buy in now. It's not at a price that I love, but I'll buy it at a price that's okay, right? It seems reasonable at that price because I don't think it's going to come down more. And that's really, to me, investing with emotion, right? That's FOMO, fear of missing out. Like, okay, this isn't going to come back down. I need to get in now. That's not the way I like to operate. Okay. If it never comes down to my buy price, and my buy price can move over time, right? It moves according to what is the underlying value of the business. Okay. So it doesn't need to come down to 220 over the next 5 years for me to get in. Maybe that intrinsic value target moves up over time and I can still get in during the next dip, right? There's always a next dip, guys. That's not to say a great compounder will get down to an attractive price in the near term or even over the next 5 years, right? If you look at the price history of great businesses, take Constellation Software, okay? You look at the price history of Constellation Software, I mean, it is just an exponential growth curve, okay? So it's possible, if you're too focused on valuation, you might never get into a business like that, which is okay, right? It's a shame because it's such a great business, a great compounder over many decades, but it's okay, all right? I would urge you to be unreasonable when it comes to entry points into businesses. And if you have a list of 10 businesses and you've got target buy prices, you might only get 1 or 2 or 3 of those over the next couple of years. All right. That's okay. From my perspective, that's perfectly fine. I say set a high bar, a really high bar. And once in a while, you're gonna find something that you can take action on. And that's enough. 1 or 2 investment, 1 or 2 fat pitches every couple of years, from my perspective, is plenty. Let's see. Look at where it is today. Yeah, this is back to Alibaba. It just reaffirms the belief that being unreasonable. We are on the same page. I didn't even read this, and this is exactly what I was saying. It just reaffirms the belief that being unreasonable in public markets helps. That's perfectly aligned with my approach as an investor. Sorry if it's already answered. Are you planning on leading up Baba again? I assume that's buying more Baba. Again, I bought some recently. May buy more, right? I always may buy more, especially since Charlie still seems bullish on it. My gut is I don't want to be too much more into Alibaba on a cost basis than I am now. So even if it keeps going down to 100, down to 75, just the way I approach it to make a full conviction bet, right? Initially, you're probably not going to see me buying too much more Alibaba. I've kind of started looking at some other opportunities, but it's very compelling, right, to keep buying as this thing drops. And I'm sure it's a very sound approach for many of you. Just not quite how I'm approaching it. Have you established a bear case for Alibaba? Yeah, I just, who was it? I just put out a tweet recently on, there's a guy who does a lot of research in China. And he just put out a podcast on Alibaba. He said, what was it called? My biggest long-term worries about Alibaba, something about that. And it was just really well thought out. I would highly recommend you guys check that out if you are invested in Alibaba, or even if you just have other investments in China, or you're thinking about getting into China. I really appreciated his podcast on that. Some of the things he mentioned, common prosperity, right? If Alibaba, obviously they put some money towards common prosperity recently. If that becomes a regular thing, it could become a fairly large transfer of wealth away from owners of Alibaba into kind of the economy of China, all right, for this common prosperity program that China has going. So that was a concern. The delisting risk from the New York Stock Exchange was a concern from this particular investor. Alipay, Ant Group was a concern in terms of the goals that the CCP has moving forward for China may not align well with the current business enterprise of Ant Financial. Okay, so could be some issues in terms of Ant growing, in terms of what the CCP wants to see in the financial sector of China's economy. There could be some limitations around growth in some of what were the more promising segments of Ant Financial. So that's a concern. And then the last one is just around monopolies and competition in China. So e-commerce, the competitive environment in e-commerce, there's a concern that the CCP won't let Alibaba grow much more, okay? Because they're concerned that other players won't have kind of an equal opportunity to compete in that space. So that could really hurt Taobao and Tmall in terms of how much those are able to grow from the current market size within Alibaba and the Chinese economy. So those were kind of 4 areas of concern for this particular investor. Sorry, I'm blanking on his name, but seems like a really smart guy. I think he has like a paid subscription newsletter or podcast that he puts out. So check him out. I'll try to find his name and put it in the description. But always looking for people, particularly who live in China, right, and invest in China, to learn from around the bear case for companies like Alibaba and Tencent. So I was really happy to find him. So I think I'll take one more. Sorry, I wish I had more time today, guys, but I got a late start. Had to give my 3-year-old a rapid COVID test because we've been doing traveling and he's had some sniffles. Fortunately, it turned up negative, but it ate up some time this morning. Yes, Enrico La Quinta. Thank you, Luis. That's who to find on Twitter to hopefully figure out how to buy races from Germany, from Greater Europe. Look up Enrico La Quinta. Last one. Hello, Brad. Considering today's fundamentals, at what price would you sell all your Baba position? Thank you. Yeah, well, as I said before, guys, figuring out when to sell is much more difficult than figuring out when to buy, okay? It's easy to kind of wait for those fat pitches to buy or to outsource a lot of that to great investors, right? What are great investors buying recently? And what was their likely buy price by looking at the low for the quarter that they bought? What is the price now? That gets us a long way in terms of what might be a fat pitch. So, but in terms of selling, it's harder. My ideal is to hold these companies for decades, all right? Because I have a lot more confidence in these businesses compounding my money over time than me doing it, right? By jumping around to different investment opportunities, to tinkering with the portfolio. I think I'm much more likely to have these great returns over time by letting great businesses, great management teams grow my wealth, okay, over many years. So from that perspective, I hope to hold Baba for a long time. I hope to hold Baba for, let's say, 20 years, okay? At what price would I consider selling? And this is something that Pabrai has talked quite a bit about as well, Monish Pabrai, where, you know, he's had a shift around this. Buying 50-cent dollar bills, it was clear. When the price gets up to $1, right, you buy it 50 cents, price gets up to $1, you're out, okay? You've reached intrinsic value of the business. But today, Monish Pabrai looks at his investments and thinks to himself, is the business getting better? Okay. This thing could be, you know, very frothy from a price perspective compared to intrinsic value. If the business is getting better, you know, don't mess with it. Okay. Just hold it, because Pabrai has seen the immense power of holding great businesses over decades. Okay. He's learned much of this the hard way. In fact, I think all of it the hard way. Obviously, he's been able to capture great investment returns by selling at very frothy prices, right? He's had 200 baggers in the early years before Pabrai funds, where he was able to capture, you know, 150x or something on one. It was like 15,000 that became, you know, 2 million or something like that. And then another 100,000 that became over 10 million. So incredible bets early on from getting in and out of positions. But he's also had some really hard lessons around Moutai, around Ferrari. He picked up a lesson from Guy Spear around Crystal, where Crystal, if Guy Spear had simply held Crystal, I think he bought around 2001 or 2002, it would be worth more than Guy Spear's current portfolio. Okay, I think like twice as much as Guy Spear's current portfolio. So the power of these great compounders over time, you really can't beat those. All right. And so that's what makes selling so hard, because the big mistakes around selling are actually going through with the sale. Okay. Selling businesses that would have created incredible wealth for you down the road if you had simply done nothing. Right? If you'd simply stared at the wall and watched the paint dry instead of tinkering with the portfolio, thinking you were smart. Terry Smith recently talked about their decision to sell Domino's, right? He said even the management team thought the price was frothy, right? Thought that the business fundamentals weren't going to catch up with where the price was for Domino's, okay? The management team of Domino's was saying this. They were wrong. Okay. Terry Smith was wrong to sell Domino's at that, what seemed like frothy valuation. Okay. So the best thing we can do as investors is identify these businesses that are worth holding through, you know, what seem like frothy valuations, what seem like frothy prices in the market, because they're just going to keep going. Okay. And obviously, you know, it's easy to identify some of those. If it's easy to identify that they're those great businesses, you probably have to pay an arm and a leg for them. It might be worth paying that arm and a leg, or you can just be unreasonable and decide, okay, I don't want to pay an arm and a leg. I'm just going to pay an arm. What price is that? And wait until that great business hits that price, right? And again, it might be a moving target. It will be a moving target. The intrinsic value is going to change over time. But once in a while, you'll get one, okay? You'll get one that comes down to where it's just an arm. You just have to pay an arm for it. And I think that's where we're at with Baba. Again, nothing here is investment advice. But I would encourage you, find these great long-term compounders, ideally when they're smaller, right? Much smaller than Baba is today. And know where you want to buy. Okay. What's attractive for you to buy, where there's low risk. Okay. A lot of things can go south with the company and things are still going to work out for you. And you're going to be able to hold. Identify those companies where you will be able to hold through thick and thin. Okay. That is the most powerful position to be in. as an investor. So that's all I got for today, guys. Thank you for all of the activity in the chat. I didn't cover any of the questions from the community post. I was a little short on time. I'm going to try to do another Q&A before next Wednesday, just so I can tackle some more of that. And this is just fun for me. This is my favorite format. I like this a lot more than just, hitting record on my phone or my computer and uploading and not being able to interact in real time with you guys. So this was awesome. I've never had as many people on a live stream as today. Thank you, all 86 of you right now, for being here. Really appreciate that. I don't take that lightly, that you guys are, spending time with me here today. I know there's a lot of other things you could be doing. But that's all I've got. If you guys have any follow-up questions, let me know in the comments after this video gets published, and I will address each of those. Okay? So hit me up in the comments. And with that, I will see you all in the next video. Take care.